Thank you all for joining today, this afternoon's presentation. My name is Kieran Tyler. I'm an NGLs analyst with Kepler Insights based out of London. I've been with the company for just over a year and a half now. And today I'm going to give you an overview of the global LPG market and Kepler's view of how it's going to develop over the next 12 to 18 months or so. And the structure of the presentation is that it's going to be largely focused on supply and demand balances, as well as import exports and key waterborne flows to major markets. I'm initially going to focus on the west of Suez supply, then east of Suez supply dynamics, and then I'm going to move on to west of Suez demand, and then finish up with east of Suez demand, and then just go over our sort of our global balance and overview. And at the end of the presentation, I'll open it up to any questions. There is a small Q&A box, so feel free to write in that throughout the presentation, but I will not answer questions until the very end. So without further ado, let's begin. So in relation to west of Suez supply, obviously the big question mark is what's going to happen with US output, particularly US field supply in relation to LPG. We believe over the next 12 months, there's going to be strong growth out of the field, particularly from the Permian Basin patch. A lot more drilling, there's a lot more investment in takeaway, processing, and export capacity that's going to be online in a form of fractionation units and terminal capacity. So we see the US reaching record export levels again over the second half of this year. I think what's interesting to note is that we also believe that US LPG demand is going to continue to slowly shrink, which is going to exacerbate the length in the market. The shrinking demand largely coming from the contraction in the residential and commercial sector, the cylinder markets in rural areas. And this means that in terms of length, we actually expect US balances to lengthen by just over 200 kbd over the second half of 2024. And I'll go into it in more detail towards the end of the presentation, but because we don't expect demand in key regions in both the west and east of Suez to pick up as much as US supply, we think there's going to be a lot more length in the US system, which is going to have to force a lot more molecules into cavern storage, particularly propane. And we think there's going to be a lot of US origin LPG. It's going to struggle to find a home, especially over Q3, which is, of course, the off season typically before you have any heating demand. So far, for the first half of the year, we've seen US exports increase by about 7% or 150 kbd to just over 2.14 million barrels per day. The other thing that is worth noting in our call, which is not shared by a lot of the market, we actually think US NGLs production is going to peak next year by the end of 2025 and then slowly begin to plateau. But we can get into that in another time. But yeah, just worth noting a tremendous amount of length out of the US once again year over year, which the market's going to struggle to absorb. In the other part of the west of Suez, in the North Sea, and the North Sea, the trend is that it's becoming less and less significant as a supply hub, even for Northwest Europe. There's an annual decline rate since 2017 of about 8%. This has been exacerbated in recent years by the fact that natural gas prices have been trading at a premium to both propane and butane by and large for the last 36 months or so, which means that gas processing plant operators have been rejecting as much propane and butane as possible based on specification limits into the natural gas stream to be sold as natural gas rather than turned into purity products. We think this trend is going to continue. There's some nuance there, of course. In recent weeks, we've seen we've seen propane obviously pricing at a premium on an MMBTU basis, and some of that escaping from the natural gas stream. Our call this year for the North Sea output is an 11 kbd increase, so a small uptick, but the trend over the next few years is we expect it to slowly continuing to decline, which basically means that Europe, in particular Northwest Europe, is going to become even more reliant on US barrels, particularly from Marcus Hook, to balance its demand requirements, which has been a trend for the last 3.5, 4 years now anyway. And we see that becoming even more acute over the next 12 months. Um, the other big interesting supply dynamic that's going to be occurring is in Russia and Europe over the next 12 months. Last December, the European Union passed some legislation in relation to the 12 sanctions package, and essentially they've banned Russian origin LPG from this December, December 18th. And what that means is you're not going to be able to rail in Russian origin LPG from Russia into Poland, Latvia, Lithuania, the Baltic states, a portion of which is being re-exported into Western Ukraine via truck. And this is going to create some interesting dynamics. And the reason is because of the lack of capacity, particularly in Poland, to be able to import via rail from Western Europe, from the ARA, an equivalent volume of these molecules, which are going to be essentially lost. So obviously the market's had a minimum of 12 months to build out some of the infrastructure and prepare for this change. But we don't believe it's enough time to fully allow for a smooth transition, which basically means that prices in Eastern Europe, in particular Poland, and with the border with Ukraine, are going to spike as supply is going to get very tight in December and January. Most of the demand in those two regions is from the auto gas market, not heating demand. There's small pockets of heating demand in rural areas, but most of their heating in the winter is via natural gas. So it's actually an auto gas story, but it's also a propane story because, particularly in Poland, I just wanted to note that much like the gasoline market, which has a summer and winter spec, this is also the case with auto gas. And the winter auto gas spec in Poland can be up to 100% propane. So I think this is, yeah, it's mostly going to be a pull on propane. And the other consequence of the ban is that Russia is going to have to push its barrels onto the water. Now, there is some overland infrastructure which goes east from Russia into Mongolia and China, but that infrastructure is not very well developed. And according to our estimates, they can only move around 10 kbd of LPG eastward. So if you look at the chart on the right there, you can see that Russian exports, even just waterborne ones, peaked in 2018, and they've been contracting ever since. So Russia is no longer a major net exporter or supplier of LPG to Europe, let alone the global market. This is primarily because Russia's petrochemical demand from LPG fed steam crackers, as well as growing auto gas demand in the country, has meant that their net length has contracted significantly. However, the fact that you still have around 70 to 75 kbd of Russian railed exports into Eastern Europe, which have to be replaced and forced onto the water, will have some interesting dynamics. In particular, it's worth noting that most of these barrels are going to have to move through Ust-Luga, and they don't have the export terminal capacity there to dock the very large or even large gas carriers. At most, some small, sort of medium-sized gas carriers, and mostly small gas carriers and handy-sized. So we believe what's going to happen is Russia's going to have to find markets net short locally to fulfill from friendly nations. And geographically, that would be Morocco and Turkey. And I think what else is going to happen is there's probably going to be some ship-to-ship transfers of from small gas carriers to large gas carriers, probably around the Baltic coast. And then those large gas carriers will then move to much larger, further away markets, as we've seen in the past, such as India. potentially even China. But obviously, the molecules are going to have to price at a significant discount for this to be workable. And in turn, as the small gas carriers are going to be probably log jammed doing these ship to ship transfers, or potentially trying to go a longer route all the way to Morocco to feed the butane short there, this is going to probably push up small gas carrier freight rates and handy size freight rates from early December all through Q1 next year, we believe. So it's worth noting that this is going to stretch some of the physical infrastructure to its limits, and there's going to be some interesting differentials going on, but it won't be as tight as what we saw in March 2022, which, if everybody remembers, a couple of weeks after Russia invaded Ukraine and Russia banned the export of LPG into Ukraine, and you saw a tremendous spread between Ukrainian LPG prices and ARA wholesale prices. Yeah, there was a lot of profit to be made moving barrels from Western Europe into Far Eastern Europe. It won't be quite as extreme as we saw then. The market has had time to adjust, and in Poland, in particular, a number of companies which are headquartered in Western Europe. Since the invasion began, they've been looking to move away from using Russian LPG and increase import infrastructure. So the final sort of supply side LPG related market I wanted to talk about was Algeria. Now, just in terms of direct output over the short term, we don't believe Algerian exports are going to climb significantly this year, a small uptick. And this is primarily because of the OPEC Plus cuts limiting how much crude and condensate can be produced, and the fact that Algeria, the vast majority of the LPG that's produced, is a byproduct from crude and condensate production, essentially. But the most interesting thing I think to note with Algeria is over the medium term, Sonatrach is looking to build out its petrochemical assets. And because of that, we think that propane supply out of Algeria is actually going to start shrinking over the next couple of years. There is a PDH plant which is being funded, which is I believe started to be built this year and should be completed by the second half of 2026. And also there's a joint venture which Sonatrach has partnered with a company in Turkey, which is Sonatrach's basically going to supply all the propane for this PDH plant in Turkey, which basically means you're going to have either domestic or term contracts propane out of Algeria being tied up and not available on the open market, which is going to be quite a significant change. We expect this to continue over the medium to long term as Sonatrach and Algeria look to build out even more petrochemical assets and sort of add value to the hydrocarbons that they're producing domestically. But for this year, we expect it to be almost flat in terms of output, and therefore exports as more of a medium term view. So in relation to the east of Suez and supply, obviously dominated by the Middle East, a handful of countries, again, much like Algeria, of course, the vast majority of the LPG which is being produced and exported, it comes from a byproduct of crude production primarily, and obviously in Qatar and Iran more and more from natural gas production. What we've seen recently is that the OPEC production cuts is helping to curtail LPG supply growth in the region. We estimated at around 50 kbd or 3 VLGCs per month. So as long as these cuts remain in place, it's just putting the thumb on the potential LPG exports out of the region. However, and I'll go into more detail in the next slide, but obviously that hasn't stopped production increasing dramatically in Iran as they continue to develop their South Pars field. And over the last 12 to 18 months, there's been quite a large buildup of refining capacity, particularly in Oman and Kuwait and Iraq, and a little bit in Saudi Arabia. And that's also helped with LPG output. So rather than coming from the field, we've seen an uptick in exports linked to the fact we're getting a lot more length out of the refining system in the region as new refining capacity ramps up. Our call for the second half of the year is that Middle Eastern LPG exports will hit 1.5 million barrels per day on average, making it the second largest region in terms of exports in the world after North America. Yeah, I wanted to focus a little bit more on Iran because over the space of the last 2.5 to 3 years, Iran has become one of the largest LPG exporters in the region, only slightly behind the UAE. This is almost exclusively to do with the development of the South Pars, Condi, and gas fields, and how rich in NGLs the field are, and the processing and fractionation capacity that Iran has built up over this time period to export and sell the LPG and other NGLs onto the open market. Now, obviously, because Iranian volumes are sanctioned, the vast majority of these are clearing into independent Chinese companies. And we kind of expect that to continue. We actually expect that by 2026, assuming that the developments which are multi-phased in the South Pars continue unabated, that Iran will actually be the largest LPG exporter in the region, getting closer and closer to 500 kbd by the end of 2026. But there is some risk to Iran's LPG exports. There's obviously a presidential election coming up in the US, and if a very hawkish, hardline administration comes into office, for example, like we saw the Trump administration previously, and if therefore sanctions become a lot tighter on Iran because of that, you can see there's a potential that LPG exports will also be affected. We saw this during the Trump administration. You can look at the terminal and see the drop in Iran's LPG exports, and this is largely a function of the fact that because crude and condi exports are being sanctioned, they weren't producing as much, and you had less LPG as well coming out of their hydrocarbon system to be exported, and it fell by, depending on the time period, it fell by between 15 and 20%. So it's worth noting that from Q1 next year, there is a risk that Iran's exports could start to come off a bit after their recent surge. Over the last couple of months, we have seen a bit of a drop in exports as well. We believe this is related to some quite heavy planned maintenance that's been carried out on the South Pars fields, and their exports should start increasing again on a month-on-month and year-on-year basis from next month now. So finally, I've kept this section in the east of Suez part, just because most of the additional refining assets coming online have been in the east of Suez, and therefore runs have been a bit higher, especially in the Middle East. So this is our current call on what we think how global refining runs are going to play out on a sort of year-over-year basis, and how that translates to additional LPG coming out of the global refining system. Obviously, recently there's been run cuts or a trimming of refinery runs in parts of Northeast Asia, and runs in parts of Europe haven't been great as they have in past years pre-COVID. But in the Middle East and obviously in West Africa now, we are seeing refining capacity ramping up and on a year-over-year basis, and this is adding to the lengthening LPG story on the refinery side. It's clearly not as much as from the field, but it's just noteworthy. And most of this is coming out of the Middle East, and a lot of it is going to exports rather than being consumed domestically. as you can see on the terminal data that we have. I think next year will be a bit more significant, assuming that the macroeconomic conditions in OECD improve, and we'll be able to see refinery LPG increasing even more than we see this year. So that's what I wanted to say about the supply side. In relation to demand in the west of Suez, there are a couple of key regions. Europe is one of them, and as I spoke about during the uh, second slide in relation to the North Sea, Europe's dependence on US imports to balance, and Europe as a continent in terms of its net short has been increasing steadily over the years. And there's a couple of reasons for this. On the supply side, as mentioned before, North Sea output has been slowly but steadily contracting since 2017. We've also had some refinery capacity closures during and just after COVID, and some refineries being converted into biorefineries. So that's helped offset the lightening crude slate, which in theory has increased LPG yields. We've also had less LPG in the open market because there's been a number of months over the last year and a half in which LPG has been at a discount to natural gas. Therefore, refiners have been recycling the LPG yielded at a refinery into the furnaces, especially propane, rather than importing natural gas for their power and energy needs. But secondly, and maybe more interestingly, is the petrochemical demand space in Europe. So, there's been a lot of sort of negative news out of Europe in the last couple of months in relation to naphtha crackers closing down. Obviously, Sabix in Glean, Olefins number 3, and Exxon announcing that they're going to be permanently shutting down their Gravejon naphtha cracker in northern France. However, Europe has the most flexible steam cracking industry in the world as a ratio of ethylene capacity production. So we estimate at roughly a third of all ethylene capacity in Europe has some kind of flexibility built into it. So what's basically been happening is naphtha crackers are not running very well, and some are being forced to shut down. And it's allowed those with some flexible furnaces to increase their utilization rates, which is helping LPG demand a little bit. And it's helping to offset the slowly but steadily shrinking sort of residential and commercial cylinder market, which has been a trend for the last almost decade or so in Europe now. Secondly, it's also been the ramping up of a new PDH plant in Poland. Grupa Azoty's PDH plant is finally online after, I believe, over a year and a half of delays. And that's added an extra roughly 17 kbd of propane demand into Eastern Europe. And over the next 12 months, there's one more PDH plant which will ramp up. That's Borealis's. That also had some delays and setbacks. In theory, it should have been up and running at the end of last year. But we now expect it to online by Q2 next year. And it's going to be placed very close to their first PDH plant in Antwerp. And that's going to add an additional 30 kbd of propane demand once it reaches full rates by late Q2 next year. So the petrochemical industry in Europe for LPG is looking a lot more bullish compared to naphtha. That's what I wanted to highlight here, due to the flexibility of the industry and the fact that there's continuing investment in some PDH plants. Even though traditional refining capacity is slowly shrinking and bio capacity is coming online, which means Europe's net short increases. And it'll mean that sellers in the US, the nearest net long region, Marcus Hick in particular, are going to be able to sell additional barrels into Northwest Europe as this trend continues. I just wanted to highlight here some of the nuanced dynamics of the European petrochemical industry. So the trend over the last couple of years, of course, has been closures of smaller, less efficient, less integrated naphtha crackers. If we remember, in the summer of 2022, Versalis shut down their naphtha cracker in Porto Marghera. SABIC's the most recent one, and Exxon we expect probably towards Q4 it will be offline, but I mean at the very latest, I think December now. I've highlighted in this chart the ethane cracker that SABIC is in the process of upgrading in Wilton because I believe the latest information we have is is expected to start up at the end of this year. It was mothballed back in 2021, and roughly $1 billion have been allocated to upgrade it, and it's going to import US ethane and crack that as a sole feedstock. It's quite a large cracker, 865 KT of ethylene. And I think once that ramps up, it's going to threaten other naphtha crackers in Northwest Europe. I think there's some smaller, inefficient crackers, even in Germany, which I expect to potentially shut down, assuming that SABIC's ethane cracker ramps up and achieves full rates by the end of Q1 next year. So that is going to put some pressure on the sort of the traditional naphtha cracking industry in Europe even more. I expect this trend of naphtha crackers to continue into the future. And I think the only other thing to highlight, as I mentioned previously when I was talking about Algeria, there is a PDH plant which is in the works in Turkey, which is going to be reliant on propane from Algeria's Sonatrach for its feedstock needs. But we do include Turkey as our in our Europe balance. So it's just again highlighting that as naphtha crackers start toppling over, this is not necessarily a bad thing for Europe's petrochemical industry in relation to LPG demand. The flexible furnaces will be able to run harder, and you're going to need some more propylene, which is lost from naphtha cracking. So PDH plants are being built. So again, this is more bullish news for LPG demand going forward in Europe. So yes, on to Africa, the other most probably interesting region in terms of the demand side, and it's growing net short. You can track on the terminal how much length there was in Africa over a decade ago now, and how it looks today. And positive signs of demand outpacing supply. Most of the length in Africa comes from Algeria and a little bit in Libya, and more and more in West Africa now. A lot of the demand also is located, admittedly, in North Africa, out of Morocco, due to a subsidy scheme there for butane cylinders for cooking use, and in Egypt. Egypt's contributed to the growing net short this year quite a bit, and this is partly a result of the fact that natural gas production off the coast of Egypt has been underperforming. And therefore, a lot more LPG is being used as natural gas has become less available, more expensive. However, on top of that, there's a number of governments across the continent in Africa are trying to implement schemes to mimic what has been so successful in Morocco and further afield in India and Indonesia, which are the subsidy schemes governments introduced to try to get rural populations in particular, move them away from burning biofuels and animal dung and charcoal and other heavy, more polluting fuels, and towards burning a cleaner fuel such as LPG. And typically these schemes, government hands out some basic infrastructure and also helps subsidize some of the cylinder uses and cylinder recycling schemes within the country, allowing cooking in particular, the cooking demand to switch away from heavier, more traditional hydrocarbons into LPG. So that's also helping to drive this dynamic. And we expect Africa to become an increasingly net short region going forward. And at the moment, we're forecasting that by around the second half of 2026, its net short should average about 100 KBD. And those positioned to help feed the growing demand. Again, it's mostly going to be on the west coast of Africa. It's going to be via US Gulf Coast sellers, and on the east coast and parts of Central Africa, it'll be from sellers in the Middle East, because they have the geographical advantage there of moving volumes into the continent. So it's another kind of bullish case for west of Suez LPG demand going forward is Africa. Now, South America is less so. It's a little bit more bearish. You can see in the chart there, it's net short. It's kind of fluctuated only slightly over the years. It's an interesting region in the fact that, the theoretical potential for NGLs production out of Venezuela and Argentina is tremendous and would equal or rival that of, the US and even the Middle East if the infrastructure, the expertise, and the capital were available to develop them. But unfortunately, despite having an advantaged geology, that hasn't been the case for numerous reasons. But nonetheless, we expect the output over the medium term to increase, particularly from Brazil, and that the region's net short position will slowly but steadily shrink. And this will have the greatest effect on sellers in the US Gulf Coast because supplies out the US Gulf Coast provide the vast majority of the supply for the net short in the region. So it peaked in 2016, as I say there, and about 140 kbd, and it's kind of lessened and then got worse depending on the year. But we don't expect it to continue to grow significantly. And unfortunately, a number of countries in that region are suffering from some economic malaise and slow growth, and that's been hindering local demand, the majority of which is linked to residential and commercial cylinder usage in the region. So east of Suez demand is the most important demand center, particularly Asia, of course, in the LPG world. And more so than just Asia, China has come to dominate the demand side of particularly the propane equation of balance in the market. As I'm sure we're all aware, the reason is over the last decade, there's been a tremendous and rapid build out of PDH plants in China, to the point that it looks like they are suffering from overcapacity to a certain extent. Utilization rates last year were very low. We've seen some improvement recently, but there were a number of PDH plants which were delayed from entering service last year, ramping up this year instead. Now margins have slowly improved. So the theoretical additional demand this year, just almost from propane alone, will be about 75 kbd as around 2 million tons a year of PDH capacity ramps up. However, the question is, how hard are they going to run? And currently, we believe not that hard, more so than last year, but closer to the 75% mark. It's a bit of a tricky call to make. There's lots of mixed signals out of the Chinese economy in terms of the macro situation, consumption, and what's been happening with the construction industry have been sort of particular points of sort of question mark about how much growth we're going to get from the petrochemical markets because of the issues that are faced in those two market segments. A number of the plants that were originally built in 2014, they are using an older technology, less efficient conversion rates because they're not using the latest catalysts, and the capacity themselves is smaller. So I actually think we're going to start seeing some rationalization in the Chinese PDH industry, if not by the end of this year, then by early next year. So even though we are going to see a lot of growth from the petrochemical sector in China, I think it's going to be hindered by the fact we're also going to start to see some rationalizations. And again, this is primarily because China now has moved away from this double-digit growth in polymer consumption and petchem consumption, and the country's ability to build out capacity or supply of base chemicals is now outstripping the ability to consume them via the demand side of the equation. So that trend will slowly continue. Outside of Asia, there has been some mixed LPG news for this year in relation to flexible feed steam crackers and what they're just choosing to crack. Since the middle of May, according to our calculations, is actually be more economical to crack naphtha again rather than propane. This is largely a function of the fact that we had some tightening LPG supplies out of the Middle East, particularly from Iran, and you had China's PDH plants coming back from spring turnaround and some new units ramping up, absorbing a lot of those barrels. And propane prices have been increasing over the last 6 weeks or so because of that. But actually expect Chinese PDH rates to start falling again over the next 4 weeks, and for Middle Eastern LPG exports to rise, and for LPG balances in the east of Suez to lengthen enough that by the end of July, I think naphtha will no longer be economical to crack versus propane. The other issue in the region has been some ongoing technical issues at Vietnam's new steam cracker, flexible feed steam cracker, which theoretically would have been able to crack around 50 kbd of propane if it was running at full rates, but it's been suffering from a number of technical issues and have been sort of online and offline for a few months since February, which was only a month and a half after it actually entered service. So that's also been weighing on Southeast Asian demand over the last quarter or so. I mean, outside of East Asia, of course, the largest net short is India. Growth has, for the first quarter, is kind of surprised to the upside a little bit. Basically, last year, the Modi government reintroduced some subsidies for low-income households. This has been helping to buoy LPG cylinder demand. So even though cylinder penetration rate or usage rate in the rural areas in India is close to 100%, it's a high growth population, the economy is growing rapidly. So we've seen cylinder usage increasing quite steadily, but no longer at the double digit growth we saw a good 5, 6, 7 years ago when this subsidy scheme was kind of at its height and booming. It doesn't mean that growth is going to completely stop. There's always industrial demand. And as I said, the economy and the population continues to grow, and that's adding some natural growth pockets there, even as cylinder usage kind of maxes out in terms of the penetration rate in the countryside. Also, I think the big question mark now is now that Modi's government or party is essentially once again has won the election recently and is going to remain in office. Does he start rolling back the subsidy scheme? It was seen as a bit of a kind of political ploy last year when it was reintroduced. So there is a potential that it will be rolled back again for the low income households. If that is the case, obviously, it's a very price sensitive market, and you could see LPG demand growth falling. I don't think we'll see demand contracting, but rather than seeing this 3-4% potential growth, if the subsidy scheme is removed, it might drop back down to sort of 2, maybe 2.5% at most. But essentially, we continue to believe its net short position will to continue to slowly grow into the future. And this is unlike Indonesia. So Indonesia is worth highlighting because similar to India and Morocco, there is a very sort of successful government scheme subsidizing LPG cylinder usage as an alternative cooking fuel. But over the last year or so, the Indonesian government has been looking at ways to try to scale this back because the subsidies are dramatically eating into the state's budget. The scheme's been so successful that it's too expensive to continue at current levels. Similar to India, it's a fast-growing economy with a growing population, and one way that they are thinking of or they're trying to dampen LPG usage is by handing out some electric cookers to low-income households. So they can plug those into the grid, and the grids run off various different hydrocarbon fuels, but not LPG. So they wanted to introduce 500,000 to households. The latest data I've seen hasn't been fully successful. They've been able to roll out about 360,000 of these cookers to low-income households. But I believe it's one factor why Indonesia's net imports this year have been shrinking slightly, not dramatically, but we can see on the terminal that imports are down by about 15 kbd year over year. So, assuming that the government's policy of moving away from LPG and LPG subsidies because it's become too expensive and eating into too much of the state budget, if that continues forward, we can actually expect Indonesia's net short position to slowly but steadily decrease from here on out into the future, which is going to sort of counter the ongoing slow growth we think we're going to see in India. Um, okay, so time for a global overview. I think the takeaway from this presentation that I wanted to get across is essentially that we think over the second half of 2024 that we're going to have quite a lengthy LPG market. This is primarily driven by tremendous amount of supply growth out of the US and to a lesser extent in the Middle East, and not enough demand basically out of China because we don't think the new PDH units ramping up are going to be running very hard. So those are the two sort of biggest equations in the market. So even though you do get a growing net short in Europe, it won't be enough to absorb all those additional barrels, many of which are going into storage caverns in the US. Now, obviously, there's always a big question mark in the LPG market in relation to the heating season and Q4 into early Q1 next year, and how harsh or potentially mild the winter's going to be, which often does also act as a balancing mechanism. We've seen a couple of mild winters in parts of the Northern Hemisphere, particularly in Europe, which has not added to the demand side as much as anticipated. So it's always sort of a question mark about how much heating demand are we actually going to get over Q4, in particular in the Northern Hemisphere. But assuming it's a typical, regular or normal heating season, we still expect there's going to be quite a lot of length in the system around that time, particularly from the US, which is going to be difficult to absorb. Especially so if the Chinese economy does not improve as quickly as some expect, meaning that PDH plants won't run as hard and will run closer to the kind of 75% average utilization rate. Beyond that, going forward, we actually think we will start to see tightening again from the second half of 2025. Again, the assumption here being that the macroeconomy in OECD countries as well as China improves, that inflation is controlled, interest rates fall, consumption increases, petrochemical demand therefore increases. We have new capacity coming online again in China, another handful of PDH plants ramping up, which will offset some of the smaller ones rationalizing, and another PDH plant in Europe. And we believe there's enough demand from the second half of next year. It's actually going to start outpacing some of the supply growth out of the US and Middle East, which will be a bit more meager. So the current length and the current price story, we think is only going to be around for the next, at most, the next kind of 8 to 10 months, and it's going to start to improve the second half of next year. So that was it for my presentation. I believe there's a few questions in the Q&A for me to answer, so please bear with me. So why is Iranian supply going down recently? Yeah, no, that's a good question. I did mention that briefly. This is to do with heavy maintenance, which is ongoing in the South Pass. It's unclear how long it will last for exactly in terms of limiting the Y grade or raw gas stream supply to the processing and fractionation units. But we've seen reports, industry reports, that there's going to be rolling maintenance of the fields through till this, I believe, the start of November. However, we've also read that the heaviest part of the maintenance is through May and the first half of June, which we've sort of been witnessing. So I'm expecting them to output and therefore exports to normalize from next month onwards, by and large, based on the information I've seen. Um, One other question, are there sufficient US export capacities to support the increase in production growth forecast? Yeah, that's a good question. I believe there are at the moment. Um, we don't have a we currently don't have a granular database of all export terminal capacity expansions coming online in the US. But rarely have we that there you only see maybe a few weeks of tightness when you see export capacity sort of reaching its limits before new capacity is able to come online. And the midstream companies in the US are always investing to expand and improve and build out export terminal capacity, as they're the ones which are also sort of processing and fractionating and pulling in these NGLs. So yeah, I believe there will be sufficient capacity over the second half of the year, especially considering we don't see a tremendous amount of pickup in demand from China, which will mean that export terminals won't be working as hard as potentially they would, and molecules will probably have to be stored for longer in the ground in cavern space. What's the final question? Is there any data source for how cylinder usage does Kepler have this data? Good question. I can get back to you about that. Kepler Insights at the moment, we do not have a breakdown of the residential and commercial LPG cylinder usage on a country by country level, but I do have some estimates for some countries about just rescom in general, but not specifically for households, unfortunately. Somebody may have that data, but at the moment we do not. I think there was one more question I missed, which is, did we cover the Middle East LPG supply and what's the view? Yeah, I did cover that. Sorry, you may have missed it. I can go back a little bit, but yeah, essentially the view was we're going to have rising Middle Eastern exports out of the region for the second half of the year. And that's primarily being driven by Iran and new refining capacity. So this is the slide on Iran. Obviously, the slide deck will be shared with all participants a bit later today. But yeah, essentially we see Middle Eastern exports rising by a couple of percent year over year. They are being held back by the OPEC production cuts, as the vast majority of the LPG production in the region is linked to crude and condensate output, essentially. So it will be next year, probably the second half of next year, where we're going to get a bit more growth. At the moment, we expect 35 kbd year over year growth to 1.5 million barrels per day. Oh, we have one more question coming. Is there any weather impacts on LPG markets? If so, where and how much will it disrupt the flow? So it depends what you mean by weather. Obviously, in terms of if there's a particularly heavy hurricane season in the Atlantic this year, which a number of forecasters have or do expect or anticipate over the coming months, then the disruption usually hits the US Gulf Coast. Often it's more the offshore supply, which doesn't provide a tremendous amount of output, because the vast majority of the US output now comes from drilling inland in pad 3 and pad 1, and then it's moved to market via pipe. But also, if there's refineries being disrupted, have to shut down because of flooding and particularly severe hurricanes along the Gulf Coast, that can also impact supply side, and it can also disrupt loadings and discharges of ships, which just means you have a delay in getting US barrels from the Gulf Coast in particular to typically East Asia. And from a pricing perspective, what tends to happen is that delivered prices in East Asia, the benchmarks there tend to spike. The other weather impacts, of course, as I mentioned, was just in relation to the heating season, whether we'll have a mild or regular or harsh winter in the Northern Hemisphere. It's always a tricky call to make. We've seen quite mild winters in Europe over the last couple of years, pockets of quite extreme weather events, obviously in the US and even parts of northern China as well, which can spike demand for usually a few days or a week or so, which can have some unexpected impacts. It's probably the hardest part, obviously, of the LPG market to forecast is these days is the heating season and the weather. But yeah, one to look out for over the summer months would be the hurricane season and its potential impact on US output and loadings. And then obviously what will happen during the heating season over the late autumn into winter in Q4, early Q1 of next year. Right, with more questions coming in. So last year we saw a heat impact chilling capacity in the US. Do we know what temperatures they impacted and increased freeze? How much impact utilization? Yeah, that's a good question. Very technical one. I do not know the answer of how cold it has to get to start um, impacting production. You know, pipelines start to freeze. That has an issue. I don't know what temperature you need to see, you know, the fact that the NGLs will turn into liquids in a pipeline rather than the gas. They're more difficult to move, stuff like that. I don't know at what temperature drilling starts getting affected as well. It's a good question. I will look into it and I will get back to you actually because yeah, it's an interesting question. But as you see in the US, you do need a particularly deep freeze to start impacting the production in the field. So recently, there's been a hike in propane prices in China. We've seen that naphtha-based margins improve relative to LPG. Have we seen switching for steam crackers from LPG to naphtha, and why has this been the case? Yeah, it's a good question. So I did briefly touch upon it earlier in the presentation, but essentially, so what happened in China is you had a lot of PDH plants in spring maintenance. They ended their maintenance in late April, early May, and then you had a couple of new units ramping up as well. And propylene prices were holding up, which meant that PDH margins in China were looking relatively okay. So you had a tremendous amount of propane demand pull from East China, essentially over a period of about 6 weeks or so. And at the same time, you had maintenance going on in Iran in the South Pars, which is limiting LPG supplies. Almost all of Iran's LPG barrels go to China because they're sanctioned. So that basically meant that in the east of Suez, the propane balance became quite tight quite quickly, and therefore it started making sense from sort of the second half of May, roughly, according to our margin calculations, for flexible uh, steam cracker operators in Asia to switch back to naphtha. If their switching flexibility was from propane to naphtha, it's worth noting that butane was still slightly more profitable on a net basis than naphtha, according to our margin calculations. The reason being is naphtha being a liquid, it takes more energy to crack, and you generate less fuel gas to be recycled into the furnaces to help reduce sort of the energy bills at the cracker, so to speak. So if you crack butane, basically you do get a larger chunk of off gases which can be recycled, and you don't need the temperatures to actually crack the hydrocarbon molecules into petrochemicals streams. So yeah, you have to take into account the net energy cost, but basically butane was remains more profitable than naphtha according to our calculations. So really the switch is those which have the flexibility between naphtha and propane. And again, I did briefly mention we believe that once Middle Eastern LPG exports normalize from next month, and we don't expect China's PDH industry to increase rates. In fact, I think they'll start tapering them again a little bit next month. Some of the most recent macroeconomic data out of China has not been particularly positive. So those two factors, I think, will mean, and just more supply out of the US, mean that propane will start pricing itself back into the cracking pool by the end of next month. Is our current view. Okay, I believe I've answered all the questions that have come through. So thank you all very much. for joining and watching the presentation. If there are any more questions, please reach out via this Q&A, all of your respective account managers, and I will do my best to answer them as swiftly as possible. And I will be ensuring that the PowerPoint presentation is shared with all the participants as well later today. So thank you very much, and I hope you enjoy the rest of your afternoon.